Good Wednesday morning, Market Chameleons. Or anyone joining us for the first time? Thanks for coming by and checking out the Market Chameleon pre-market show with Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I in Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Give you advice, provide you with guidance.
Excellent.
Disclaimer. And let me share my screen. While I'm sharing my screen, if you guys are joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on the show and ask your question live, we provide a link to Zoom on that live chat on YouTube. Click on that. It takes you over to Zoom. Click on the button, raise your hand. It'll prompt you if you want to turn on your video camera. You don't have to do that. Once you come in, you could ask your question live and direct. If you prefer to type your question into the live chat on YouTube, you could type it in there. Will's watching it. He'll read back the questions to me. While we're waiting for more people to join in or put their questions in there, what we'll do is start out taking a look at the pre-market report to get some insights on what's going on in pre-market hours. After that, we'll take questions. We did have a question left over yesterday about option order flow sentiment. So I think I'll, start discussing that today as well. And Will, let me know if you have questions regarding that. We'll take those. But let's start out with the pre-market report and then move on from there.
Perfect.
All right. So pre-market report, these are stocks trading in pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, I see 47 stocks made our percentage gainers list, 144 in our decliners list. So from this perspective, it's looking like we're setting up for a bearish bias at the open. But as you could see here, a lot of stocks on this list are either small cap stocks, ETFs, leverage products, closed-end funds, anything really that's listed on the major U.S. exchanges. If it's trading in the pre-market hours today and meets our thresholds, it can make this list. And what we want to do is narrow down this list to a smaller group of stocks. So what I'm going to do is use the filters here above. And I'm going to use this one in ETF. When you click on it, you get a list of ETFs to choose from. That top one, SPY, that's the broad-based ETF, S&P 500 ETF. Let's click on that. And when you do that, you'll see that the list below gets filtered by stocks that are holdings in SPY. And here we see 6 stocks made our percentage gainers list, 30 on the decliners. So again, from this perspective, it looks like we're setting up right now for a bearish bias at the open. And we are still in the midst of earnings season. A lot of companies are reporting earnings now. I think Netflix just reported, I believe, in here somewhere. There it goes. Netflix just reported earnings. That's what this little E is. So that's down 2.5% in the pre-market hours. I think Tesla had some news this morning as well that they're discounting the cars, but I think this is like the second discount in a short time period. It's a discount on top of a discount. So that was making the headline news today.
Well, that's the price of something that's coming in.
Yeah, exactly. The price of something is coming in. So I guess from this standpoint of inflation, that's good. But not so much probably for Tesla margins. Let me, if I don't have any questions on this, well, I'm going to try to go to the order sentiment, talk about that for now.
All right.
I'm going to navigate to SPY, which is usually, that's our default stock to talk about, and I'm going to go under options. These are order sentiment here. And this was yesterday's order flow in SPY. And let me see, before we get into that, I'm gonna bring up, what are we trying to do here? So I'm gonna bring up my MS Paint here and kind of draw what we talked about yesterday, for like a trade, trade setup. And usually if you're looking for a good trade setup, there are a couple important things you want to answer, right? So you have questions about it and you want to answer to make you feel comfortable about your trade setup, your trading strategy. And these are the things you will find on the website in your research to help you do that. So one is, what do we observe? We observe a price of a security. We know the price of a stock. We know the market price of an option. So those are things that we could observe. But then what does that mean, right? And we put it in relative terms. So usually you take a price and you compare it to a theoretical value, call it, or a value, right? Which would be model driven, right? So this way we have a sense of how far is the price diverging or deviating from a theoretical value that we're tracking through our model. And there are different models to do this and to place values on different asset types, whether you could options, stocks, ETFs, whatever you have, you can run different types of models within them to come up with a theoretical value to see, how far did the price move away from the theoretical value. And you usually want to have a sense of that and keep an eye out on that. So, any professional trading operation that I've seen always has that. That's at least from everyone that I've seen in my 20 years. So the next question you want to ask yourself is, okay, there are different participants in the markets, and you want to know, well, who is doing what and why. And some people call this positioning, right? You want to know, okay, I see, the price is moving and away from values. And a lot of the headlines you might be even reading today is that analysts or experts, hedge funds will say, well, the multiples, don't make sense right now, or the equity risk premiums are too low and stuff. So they're paying attention to where the prices are moving relative to the theoretical values. And even the Federal Reserve mentions that in their models when they're looking at the economy. So you go back, I forget if it was Powell or whoever was talking about in the Federal Reserves, they're paying attention to, that, valuations right now are very high. They look at the, median home prices versus median rent. They look at all these different types of metrics to measure or gauge prices versus theoretical models and valuations, and then who is doing what and why are they doing it. And those are questions that go hand in hand, right? And there are other things in there, but usually you want to start out with these if you're looking at some kind of a trade setup. So the who is doing what and why is not an easy thing to answer either, and you're running it through a model, because there is no place that tells you this person bought this stock, this person sold this stock, this person bought this option, this person sold this option, and this is what their intent was. You don't have that information. That doesn't exist. That's not on the consolidated tape. That doesn't get reported anywhere. Nobody fills out a survey every time they do a trade, and then it goes into some database that you could access. So you're running estimates on using the data available to you to make inferences. And when we talk about the stock market, then we have to say, how do we tag these people? We have certain data, right? We do have certain data that's available to us that we could start making inferences. And we know that, we could start grouping this or tagging or labeling certain trades. And that's what we start to do to try to isolate them, to give us explanations to questions. And when let's say we start out very simple, let's say these are all the participants contributing to price discovery. So let's say we start out with two types of flow that comes into the market, right? And we have flow that is active, and then we have flow that's passive, right? So the passive flow could be, people, investing in mutual funds. We have people, in, pension funds. We even have stock buybacks, but these are stock buybacks. They give it, a company announces a stock buyback, then they give the money to like whatever broker, and that broker VWAPs it over a certain amount. So these are continuously money flowing in that has nothing to do with, really, because people are looking at fundamentals on a real-time basis. It's just kind of money flowing into the market. And we get a lot of passive. There's a lot of passive flow into the market. Right now, it's even debatable. We might even have more passive than active. Okay. ETFs, all this stuff, that's going in, right? So if you just think about it this way, at work, people are fully employed. They put money into an IRA or whatever plan they have with their company. Sometimes the company matches, and a certain amount of money goes into a mutual fund. Well, when the mutual fund gets that money, they have to go and create units, right? They're not holding on to it. They have to go and put it into the market, right? So there's more buyers than sellers of the mutual fund. They have to create it, and they go out and buy more stock. Same thing with SPY. If people buy SPY, there's nobody sitting there saying, well, wait a minute, the stocks are overvalued, I'm going to hold off buying it. No, they have to go and buy it, right? People pour money into SPY, has to go create those units. They buy the stock. And then you have active traders who are reacting to, real-time data, and information. And they're usually model driven, right? So they're doing it through models. And you could have, fundamental. You could have, high frequency traders. You could have technical traders. They're watching their technical indicators. All these are very active traders that are paying attention to something and reacting to it in real time, right? So we'll see fundamental traders when earnings are announced. they're putting new inputs into their models, and then they're repricing it and reacting to that, to their new valuations. So in the active trading, we also have, options traders in there. All right. Option traders are very active. Options are not securities that you're buying through your pension fund, right? You're not trading in and out of 0 DTE options through some passive vehicle like a mutual fund or an ET, or pension fund or an IRA. You really have to be paying attention to it. So as you can see, there's a lot here, and this options traders play a role in the overall price discovery, right? Because they're signaling with their trades their opinions and whatever they're, and sometimes these are non-fundamental, right? So when we look at options traders, they're not necessarily reacting to fundamental news, because options traders can be trading volatility, they can be trading, certain types of spreads. There are different types of strategies options traders employ that are non-fundamental and could be non-directional. But options traders themselves create pressure on the stock because they're derivatives, and the underlying asset is the hedge, right? That's the underlying asset is what's driving the option prices as well. So just keep in mind that we're looking at a lot of stuff here, and when we're looking at order sentiment, we're just looking at one piece of the puzzle, okay, of the contributor to price discovery. All right, hopefully that, when you see a picture like this, you could see that there's no one metric, no one thing to look at. It's putting all the pieces together to paint yourself a picture. So let's come back now to option order flow sentiment. So when we look at that options trader, we're trying to figure out, okay, what are they doing in there? So first let's figure out, like, what are they doing in there? And there are different ways to slice and dice it and tag it. And the first question that you may have is, well, what kind of pressure today did the options traders create on the underlying asset? Okay, so it's only one of the questions we have, because when there's an incoming order, let's say to buy put, in the incoming order, the assumption is if we could figure out that, hey, the end users are buying a lot of puts, that's creating pressure on, the dealers who are selling puts to hedge their deltas, because if they're selling puts, they have a positive delta, and if they have to hedge that delta to be neutral, then they would be selling stock, right? So what kind of, and vice versa, calls, puts, all that. And when we look at the order flow, we still have to make interpretations, because nobody's telling us, here are people, here are a bunch of people from, this brokerage firm buying puts from this broker dealer. It doesn't work that way. And there are interpretations from the tape and from, our experience and benchmarks and stuff. We have to make an interpretation. So this is a interpreted, predicted value based through a model we're running. And based on that model, we looked at it. Let's say we look at SPY, and we saw there's a total of 116 million positive deltas versus a negative 122 million negative deltas coming into the market through the end users. So on balance, on net, we saw a negative 6 million deltas. All right, so that's the pressure. We don't know why they were doing it, what the intent was, were they hedging their position? Maybe they were selling volatility. We don't know the intent of every single person. There's no way of actually knowing that, because we'd have to talk to all the millions of people and they would have to answer us exactly what they were thinking, and then we would have to total that up. But that doesn't even exist. So we don't know the actual intent, but what we're doing is trying to track on balance, what kind of pressure did that trades create in the market, okay, just from the options, our interpretation coming from the options. And of course, SPY it's an ETF that can be used for hedges or whatever. So we have to keep that in mind that, SPY is the S&P 500. That's how people hedge systemic risk in their overall portfolio as well. So they could be just hedging off some long position somewhere else. So on top of that, what we'll do is convert the delta into a dollar delta, multiply the delta times the stock price, and do the same thing with all the constituents in the S&P 500 to get like a total, on balance pressure from yesterday. Now, it's not a stock predictor, so some people will say, well, does that mean that the stock will go down or up? No, it's just trying to answer a question, because there's buyers and sellers, but it's trying to gauge and answer a question of a certain trader cohort and how they may be, what they may be thinking, and how they're contributing to the overall, system of price discovery. Right? They're not the only players, but they could be a contributing factor. And in SPY, as we could see in SPY, it could be a big contributing factor to the SPY ETF, but of course, it's the whole market. So there's, lots of stocks in there that could counter all that. But we see that the option volume here is a big, is large relative to the stock volume. Okay, and we could see here that just the deltas going back and forth alone are even higher than the stock volume suggests, meaning that not all these deltas are getting hedged against the underlying asset. They could, people are hedging options against options or whatever, but you could see that in SPY, there's options play a big role. Okay, options play a big role, not the only role, but they do play a big role in the overall price discovery. All right, and options are kind of like become non-fundamental pressures on the stock because people have to rehedge their positions. It's not about it has nothing to do with their opinion about, a forecast of 5 years of earnings growth. They have options that are lasting a week, a month, 2 months, and they're trading their deltas and gammas. They have other risks involved. So these are like I would say non-fundamental pressures being created on the stock market. So again, it's one metric. It's not a prediction of where it goes, but it's one of the questions we may have is, okay, what are options traders doing? How and by how much? We could try to answer. We could try to go deeper and say why. And then we could say, well, how much of that can be a contributor to that overall price discovery? All right. And
Rob just asked, is price discovery the same thing as direction or just price?
well, price discovery is, think of it as, no, it's not price direction, it's more of the market, right, is a mechanism of competing models. And those competing models have different opinions and maybe different interpretations of different data, and there are models that are picking up information that other models are not. And then and when some of those models say this price is too cheap, they'll come in as a buy, and if it's too expensive, they're going to come in as a sell. And those models are continuously processing the data. And based on those competitions and order flow, the idea is that the market will come up with the best fair value price. Okay, so it's basically competing models in the marketplace that are pushing the price to where should it really be.
All right.
Right?
Yep.
And
Rob says, thanks, very helpful. That was excellent.
And you could probably just Google the definition. So price discovery is not something, it's not a Dimitri term, what I mean, that it is just a common known term that's what the market is. It's a mechanism for price discovery. So again, it's how much. So when we look at it and we say, okay, well, the options traders where if we follow our model, they were creating more bearish flow than bullish. In other words, we don't know what their intent was, but if they're buying a put, we don't know if their intent was really to buy volatility or to get short the market or to hedge something off. That we don't know, but the act of buying a put, just that act alone, creates a bearish pressure at that moment. Okay, so that's what this is looking at. If it doesn't matter, even if you're closing out of a put, if you have a put that you're sitting on and you're short, and you close out of the put by buying that put back, that act alone creates a bearish pressure on the market at that moment. Okay, that's what this is looking at. And here we could kind of just go down and start getting more information about, well, how did that look throughout the day? If we followed the option flow, and here this is cumulative, so it looked like the entire day was on balance negative. So it would come down, come back up, come down, come back up. Really, though, pretty much negative the entire day, and whatever happened at the end of the day, would have to go look. It just kind of started to really, fall off. And we could go down here and get some more answers. Well, where do we think the majority, the biggest delta came from? Call selling. So we could draw an inference from there. Well, could have been people just buy writing, could have been people hedging all deltas by selling calls, could have been people just selling calls thinking they're going to expire worthless if there's zero DTE. Maybe they were selling implied volatility. So there are lots of different inferences we could try to, and we could go deeper in there and try to figure it out. But from our analytics, the biggest deltas came from call sellers. There are also put sellers, 62. So you could see that a lot of selling, more deltas came from selling options and buying options. Buying puts and buying calls were similar. Buying puts were a little bit higher than buying calls, but they were close together. And then we have like the vertical spreads. So a lot of it, looks like on balance it came from call sellers. We had a big positive delta from the April 18th. So these are the expiring options. So you see yesterday's expiring options, the put, and the call. So a lot of selling on that strike. So April 14th put, if we have a positive delta, well, how do you get a positive delta? That's put sellers, right? So if you're selling a put, you're creating a positive delta, because the buyer of the put would have to hedge the delta by buying stock, selling negative delta from this call. So to me, it looks like our interpretation was that the biggest deltas were coming from the 0 DTE options. These are options that expired yesterday, and selling on both sides, the put and the call. All right. After that, you could see that most of the delta pressure is coming from the 0 DTE. So the 0 DTE options right now are playing a big role in the, in what's going on in the options trading. Oh, we're at 9:32 already. So I'm going to let people go. I think I went over already. But we could continue this tomorrow.
Yeah, perfect, D. Great job. Yeah. Thanks everyone for joining. Remember, thumbs up and subscribe to the YouTube channel. It's greatly appreciated. Great job, D. Thanks so much.
All right, everyone. Thanks for joining. Stay safe out there. Have a great